Hello everyone, welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live training session. I'm here to educate and inform you on the proper use of Hawkeye on the live edge of the market. If you have any questions or comments, over on the right-hand side of your GoToWebinar control panel is a questions pane. Please enter your questions or comments in that questions panel, and I will get to them in the order that they're received. I want to remind everyone that we are here for educational purposes only, that we are not investment advisors. We are not registered investment advisors at all. But we are here to help you and to instruct you on the proper use of Hawkeye, the application of the Hawkeye indicators on your charts, and using them to establish a trading plan. Make sure that you understand there are risks involved in trading in these markets. There's a large potential for reward, but there's also a large potential for risk. Make sure you understand what those risks are, and please do not trade with money that you cannot afford to lose. And never, ever, ever trade in a live trading account with real money until you have first proven you can consistently and profitably trade in a simulated trading account using the rules that we developed together. So thank you for being here. Ori, Michael, David, John, great. Thank you very much. Glad you guys made it. We're going to press on. I've got 3 different platforms set up here. I've got TradeStation, NinjaTrader, and MetaTrader 4. So if you would kindly let me know which platform and related to the question that you're asking, and if you have any specific examples like the pound yen or gold futures or Apple specifically, then let me know the instrument that you're interested in, the time frame you want me to look at, and the platform that you want me to show it on, and I'll be glad to do that. Otherwise, I'm going to be going through specific setups and application of Hawkeye. I'll be going through each of the indicators one at a time and giving you an introductory overview of what those are and how they can be applied to your trading. Okay, so if you guys are new to Hawkeye, then I'm going to be looking at showing you how to use the Hawkeye tools you've just acquired. If you do not have Hawkeye at all, I really want to know also because I want to be able to help you to get started with the application and applying that to your tools. Okay, Hawkeye is a premium product. It is one of the leading indicators in the market to help you to consistently be able to apply a trading plan for profits in the long term. Okay, so what we're talking about long term is not specifically the time frame you're trading, it's specifically you as a trader consistently making profits over the long term. Okay, so that's the idea. That's our goal. I'm not successful in my venture. I'm not successful as a trainer unless I have students who have learned to be successful. And that's my goal. That's why we are here to train and to educate. The software is fine, but until you become successful in what you're doing, then I can't say that I'm successful. So that's the goal. Okay, right now I am showing TradeStation platform. We are looking at longer term time frames, daily, weekly, monthly charts. On my daily chart, I do have it configured such that I'm using 2 different roadkills. This is a daily chart. My first time frame roadkill, I am looking at a 2-day. So you got a daily, a 2-day trend and volume. And I have a longer term or higher time frame heat map, which is also part of the roadkill package. It is set on a 2-day time frame as well. And then my third time frame, I have my third time frame set up as a 1 week. So on my daily chart, I am looking at a daily, 2-day, weekly setup for trade entry, and management. However, on my charts, you can see that I do have a daily, a weekly, and a monthly setup. I have that set up for 2 reasons. Number one, TradeStation does not allow us to plot a 2-day chart. So that's not an option. So if you wanted to plot a chart of 2 days, you just couldn't do it. But with Hawkeye tools, we can do that. We can look at the trend, we can look at the volume, we can look at the momentum of a 2-day chart relative to the daily chart, and then use that to compare with our weekly chart. I can chart a weekly and I can chart a monthly. So I can see overall the 6 ways the market moves, exactly where we are on any one of these time frames. All right, so that's application of a daily chart. Now you can also see that if I switch over to an intraday chart setup, this I'm looking at gold. This is a 3-minute time frame. Well, you can see that I've got the same setup on the 3-minute. I have 2 different roadkill settings. This roadkill is set up as a bar interval times 2, which is a 2 times 3 time frame. 2 times 3 is 6, so I'm looking at a 6-minute time frame on my second chart, which is this second chart right here. All right, so I'm looking at the volume, and you can see what the higher time frame is. Yep, higher time frame is that same bar interval, 3 minutes times 2, or 6 minutes. My third time frame, I'm looking at a bar interval times 4. So 4 times 3 is 12. So I'm looking at a 12-minute chart volume. And these little dots just simply show you where the volume or trend align with the current 3-minute chart. So this is my 3-minute price. Here's my 3-minute volume and my 3-minute momentum. We call it a heat map. Tell you the strength of that trend, the momentum that's coming from that. Now I can just look at this chart and chart alone. I have sufficient information to follow and to look at everything I need on this one chart to make trade decisions. So when I see a red trend dot, red volume, bright red heat map, then we know based upon the 3-step entry and exit method, which all Hawkeye users have access to, then we know that that's the first criteria, step 1. Step 2, second criteria, we look at the second time frame volume and we look at the second time frame momentum. Okay, if the volume agrees with the trend direction, which is red, and if the momentum is not bright, which means it's either dark green, dark red, or a bright red for any down move, that satisfies the second criteria for entry. Now we have 75% confidence or 25% risk that this trade is going to go in our favor. The third time frame tells us the volume. We need to see red volume agreeing with the trend direction, and that gives us the confirmation that this is a continuation, okay? And that we're moving in direction. Now, if you can take an entry on white volume, but you have to know that you're taking it with risk, because white volume tells you there's no demand on the longer term, or that there's a very equal volume distribution on the longer trade. So if you're looking for this as a short entry point, the longer time frame is telling you that it's premature. That it looks good, but this is a little premature time frame. How do we know we're even going to be looking at that direction? Well, you can see from volume, and if you've been following the last 2 weeks' blogs why I'm explaining why volume is so important. If you have not seen that, then I highly recommend you go over to the Hawkeye Traders website, go to the blog, or read last week's newsletter in your email, but I'll show you very quickly. Just click over to the blog section, and there you can see why volume is so important, and part 2 of why volume isn't so important. I'll go through and show you exactly how I look at volume and why you should understand the application and use of volume in the markets. So looking at this chart and understanding the application of volume, you can see as price reaches down, we create a nice green buying volume extension bar with a pivot. Okay, prior to the big push in the opening of this session. Then you can see a big opening pivot high selling bar, price extension, showing that this is a run up. It's a false breakout. This is they're trying to trap or sucker traders into the trade so that they can get better prices and push the market down to stop you out. Hawkeye volume is telling you this is way ahead of time. This is telling you the direction that the market's wanting to go. Volume is the one telling you way ahead of the actual placement of the trend. Okay? You can see this many, many times. You won't always see this, but usually in front of the big moves, you'll see that occur. Okay? You look back and you say, well, it didn't occur here. Well, other things occurred here. That specifically didn't, but other things did. This is a good signature because what happens on a big boat before it turns, it usually takes a while. So once you establish a move direction, you're saying you're changing that move, then it takes a while for that boat to turn and start moving. It starts consolidating, then you've got a nice pattern of reds and greens and whites and greens and reds and greens and whites and greens. That's accumulation or distribution in volume. So when you see the colors going back and forth like that, those are periods of accumulation or distribution where the market is accumulating or getting ready to move in a specific direction. And when that occurs, then you can see on the extensions where the market intent is. Volume shows its intent. Push back down, volume shows its intent. Boom. Consolidation, volume shows its intent. And then boom. Okay? Until you see a consolidation, you're going to see a continuation of trend. And that's just speaking from volume. That's right. So let me pull this back here. So that's just from a single chart. We're looking at intraday. You can do the exact same analysis on the longer term time frames if you're application and looking at these trends. Okay. You can do the same thing on the forex market as well, as I showed in all the times. You can just simply look at the application of volume on the trends and use that to your advantage, whether you're trading these longer term or shorter term. Right now, the Euro Australian looks like it's in a nice trend. You can see that the pound is overbought. Swiss franc is coming back down. Nothing is oversold. So we're looking at a intra-term trend. So shorter term, you should be able to see a bullishness on the Australian dollar. Okay, and they're coming from oversold, and then weakness on the euro, which is coming from an overbought consolidation, and then going into that trend. So a euro Australian would be what you're looking at as far as an overall trend. Where is that euro Aussie at? There it is. Okay, so weakness in the euro, which is the dominant trend, tells you that you're in for a short initial entry. Okay, so Hawkeye volume is telling you push up, double test, double top, selling, trend, selling, consolidation, second attempt, sell off. Okay, 1, 2, 3 volume bars prior to the entry point. Okay, where you see entry, the second time frame was already in. Oh, I'm sorry, first, second. Second time frame was already in volume trend. The third time frame we had volume 1, and then this current one we're having buying volume in. So there's a question mark whether this is going to be a continuation in that direction or not. So based upon the third time frame. First, second, third, then there's a question on whether that will continue. The Hawkeye zones are telling us there's a very high probability that this could bounce back up and retest the 147 area. All right, I'm using all the tools right now. I'm showing you the Hawkeye Fat Man. I'm showing you Hawkeye trend relative to volume and momentum on multiple time frames. Those are all key concepts that we need to understand. But before we go into those things, I need to be able to answer your specific questions and break these down individually. So looking at volume, then we'll be looking at trend and momentum. We'll be looking at our Hawkeye stops, automatic trailing stops. We'll be looking at the rules needed in order to enter. We'll be looking at the rules in order to take profit targets, and then we'll be looking at the rules for exits. Okay? You've got to be able to take exits in a trade, otherwise you're never going to get money on the table. You're never going to get money off the table into your pocket. Okay? So I've gone through these different examples. If you're looking longer term, shorter term, it doesn't matter. Hawkeye tools are designed to conform to your trading style, not the other way around. You don't have to change your trading style in order to make a system work. The system should be compatible and adaptable to you as a trader and conform to your trading methodology. And Hawkeye is designed to do that. And we have a whole suite of tools that are designed to work together in harmony to help you as a trader apply those tools and to get the maximum profit potential that you can get out of these trades. If you're trading tick charts, if you're trading time charts, if you're trading range bars, it doesn't matter. Long-term, short-term, Hawkeye's tool sets are designed to help you as a trader to trade the way you trade and to trade successfully. All right, John asked a question. Which version of NinjaTrader does Hawkeye work with, the free or the paid version? It works with any version of NinjaTrader, free or licensed. Exactly. The only difference on between free or paid NinjaTrader is that NinjaTrader license is required if you're going to trade with the platform. If you're just going to be using it for analysis, then it's absolutely free. Mike wants to see the S&P 500 markets, looking at a 3-minute, 6-minute scalp. Okay, S&P 500, 3 minutes, 12-minute time frame. We are looking at a really nice bounce from yesterday, consolidation, and a lot of bullishness into this morning. We can see that right off the bat, we were seeing that this morning when the market's starting to push up, a signal off the 3-minute was given right here at 07:24 Eastern Time US. Okay, that's when you have the first green trend dot, volume and momentum, second time frame, third time frame, everything aligned. So you got a nice triple dot alignment right there that said this is a great location to enter. Okay, being that that's the entry point, then you set and apply your Hawkeye tools to that entry point. You can take profits off at profit level 3, profit level 5, came back down 2 profit levels, you exit at this point. Okay? Then you take these back off again. There it is. Second entry point, nice double dot entry point as well right here where everything aligns. We've got a new entry point. Okay, so here's your new entry point rules right here. Looks like you're not quite up to a level 2 yet, but you're still up and trending. So simple application of the tools and the rules allow you to use simple concepts to enter, trade, take profits off the table, and exit with profit. Right? Looking at longer time, yep, the 6-minute was showing you that you already were building. Momentum was already long all the way from yesterday or even earlier this morning during the European Open. But you can see the faster time frame was in and out of trend, and it came right back into trend. But it's not until the longer term aligned that you're actually looking for that. How much time before this trend did we see it coming? It's a very good question. 1, 2, 3, 4, 5, 6, 7, 8, 9 price bars. That's 9 times 3. That's 27 minutes ahead of time. That volume was telling you that this trend was coming into play. And it wasn't until this bar right here that we have confirmation from the longer time frames that everything was good to go and that we could get on board with this trade. Looking at it right now, you can see that the trend has been reestablished, but notice that volume is showing you that there's a lackluster attempt to try to break out, that this is a potential head fake, even though we are breaking out of a zone, 2152.75, a 2154 push-up is saying that trying to get up into this range, I want to see buying volume come in. I want to see some strong buyers coming in. What am I seeing? A declining volume, no demand, and then sellers coming in. That doesn't give me a lot of confidence that this trend is going to continue. If I got back in here, I'd be taking profits right here because volume is already telling me there's really no consistent trend building. Longer term looks good. Everything, yeah, it still looks good that volume is coming in. and I've got confirmation, but right now, where it's at, I'm not seeing that. Okay, nothing wrong with taking profits. If you take profits, wait for a consolidation, get back in again. Otherwise, just go look for another trade. There's no reason to put risk on the table if you already have taken a good trade, taken profits off the table, re-entered, take your profits off the table, wait for the time frame. Okay? This is much more aggressive trading because you're trading a 3-minute. Okay? Yeah, if you trade a 1 minute, that's going to be really fast. Absolutely. But that's the idea. Whether you're trading a 3-minute on the futures index or if you're trading daily charts, if you're trading even on the intraday, if you're trading say a 360-minute, 720-minute, and a 1440 or daily chart, it's the same application of rules. You're aligning the trend, volume, and momentum on multiple time frames. Once they're in line, you trade in line with the longer term trend. It highly increases the probability you will end with a successful trade. All right, so if you're trading in the direction of the longer term trend, the faster time frames will always be much more profitable or in line. That's the idea behind it. So yeah, even if you're scalping it, so looking at an intraday tick chart, intraday tick charts are going to give you a totally different feel, but it's going to apply the Hawkeye rules the exact same way. So you can see there's trend, volume, momentum, all applied. You're just looking for alignment of the colors to determine trend direction. Then you take your faster tick chart, align it with your second time frame and your third time frame to see if you're going to be in line or not with what's giving you right now. Intraday stocks, long-term stocks, doesn't matter. Longer term time frames. Hawkeye works on any of the markets, any time frames. All right, let me change over to NinjaTrader then. That's not NinjaTrader. That's NinjaTrader. Absolutely. Well, here we go. This is longer time frame. We're looking at a daily, weekly, and monthly setup. Let me go back to your question there. Someone wanted me to show NinjaTrader. Where was that question at? Do these principles apply to thin markets like the crude oil? Oh man, I love trading crude oil. It's one of my faves. So yes, it does. Let me see if I can pull up a future. There we go. Okay, there's your S&P. There's the same setup. See, this is the same setup that we were watching over on TradeStation. You're just looking at it on the NinjaTrader platform where you can see about the same lineup. You got an entry criteria aligned across multiple time frames: 3-minute, 6-minute, 12-minute. You've got the same setup using your 60-minute zone where you're seeing supply and demand working together to show you where buyers are stepping in, where consolidation and overhead support or resistance play together. You can always see the zones tightening together anytime you see regions of consolidation. And then you can see potential breakout or false breakouts as we're seeing right here. This could be a false breakout because we saw volume going against us. But someone asked a question more on crude oil. So let me pull crude oil up here. Okay, you can see crude oil's extension. For the longer term, we have been in a really nice uptrend, building, consolidation, expansion, consolidation, expansion. So we can see from the charts exactly what's going on here. But right now, we're seeing that we are in a small uptrend, but consolidating and sideways. So we are definitely in a non-trend condition. We can see some weakness coming in on this last push up. We can see double top and weakness on the 12-minute as well as the 6-minute. So right now, we're waiting for this weakness to consolidate out and to tell us whether we want to continue. We can see overhead resistance already off the 60-minute. So we were expecting that. Okay, that's been there for quite some time. So as price pushed its way up, we expect to see this act as a resistance area. So, and that's exactly what price is doing. Got right up to that point and came right back down. But the extent that it came down, okay, we're looking for that to show us. Let me expand that out just a little bit. Okay, see, we are looking for that to come back down and to come back down to just under 49.50 and give us a really nice money bounce. If that's the case, then maybe we're going to be looking at a rebounce and trade back up to double top or test out the 49.79 region. So we're looking at, is that 49? I can't see it. Yep, 49.79. That's it. Okay. So that's the idea behind that, the longer time frame. But for right now, we're waiting for this to consolidate and to give us a nice clear entry point for a trade. If you're looking for this in the morning, if you were trading this during the European Open, then absolutely. Here you got a confirmation of a trend, but the volume didn't give it to you. You didn't get that confirmation until here, okay? But then the first time frame didn't let you have it. So you have to wait until they all align, which did not occur until, looks like right about here or here. And see, that's right about here or right about here. So you've got area of consolidation that you're looking at getting into. So this is a safer, a more conservative, okay, because the risk is not as much, but it's still needed a little bit of time to perk. Okay, but you still got in at this point earlier this morning if you were trading crude oil, and the trend held you in. The trend held you in until right here. Okay, this right here would have taken you out of the trend, would not have gotten you short because the longer term did not affect a or agreement to that. But the long would have gotten you back in with a nice double dot entry point right here, consolidation, another entry point here, and a confirmation of an entry point here. All right, so that would have probably produced 25 cents before the sell-off started and consolidation coming back in. And right now it looks like this is going to give another stop out at that point as well. So looking at the entry exit method application to crude oil, regardless of the market you're trading, the rules still apply. Hope that helped, Gabe. Yes, Linda, good question about a 15-minute wait on trading the markets like the S&P. So let me go back to the S&P and show you that in the charts. Coming into the market, once the market opens, at the very beginning of the market, I do have a 15-minute hold period to wait before I take any trades. That's only if I'm not already trading the pre-market. Okay, so if I'm just waiting on the initial opening of the market, or if I'm trading in my tick charts, or if I'm waiting for the market open to come in, that's correct. I have a rule that says I cannot enter a trade in the index markets until the first 15 minutes of that market has opened. Okay, it's a very standard open rule. I apply that to all of my trading. But if I'm already in a trade, as we discussed earlier this morning, if I happen to have been here, which I did not, but if I did, then you can see that I would already be in this trade, would have already been out before 9:30. The re-entry point came right at 9:30. No, I could not have taken that as a re-entry point because of my entry rule. So that's an application of rule sets, trading rules that you apply that keep you either in or out of the market. and it's for managing risk, and that's what it's all about, managing risk in the trade. So very good question, Linda. Thank you. I appreciate that. Okay, let me see if I can get some of these questions here. Silver. You want a daily, weekly, monthly on the silver using NinjaTrader. Okay. Pull that up here. Longer term. Let me see if I can put up silver. That is a contract where we're looking at the, I think it's 12. Let's look at the 12.16 for silver, see if that loads. I'm sure it will. Might not be November, it should be December. I usually don't load. This is the first time I'm loading it, so it might or might not come up. I hope it does. There it goes. All right, it took a little bit of a while to load, but it came back. All right, let me pull my zones on and off here just to clear the screen off. But you can see very nice double top break consolidation. Okay, but we're looking at very, very clear trend. Okay, changes here where you've got clear consolidation, where you've got no breaking out of a consolidation range. So you're looking at the 6 ways the market moves. We're looking at congestion trend cycles. Okay, so you look back when price goes up into that, you're looking at congestion entrance. So you've got a congestion range. Okay, once that congestion range comes back out, then you can see consolidation of that range, breakout. Here's your very first breakout bar. You know you're on a confirmed new trend down. So using the Hawkeye methodology, understanding the 6 ways the market moves, we can clearly see the buildup of silver through this time frame. Now, what is volume saying? Volume is saying you're clearly in accumulation distribution. See all the changing colors ahead of time? Okay, you've got lots of whites and greens and whites and greens and reds and greens and whites and greens all over the place. Okay, longer term trend, you can see that you are clearly congested, but you're overall biased to the short side. Overall longer term, you are in and out, in and out. Okay, the monthly, you can see that you are in a long trend monthly, and you're just now starting to get down into the trend. So a trend long. Here you are in a congested solid consolidation with breakout. So now you are in a confirmed break of congestion, but you haven't gone to complete trend short yet. But on the daily, you are definitely in a trend short condition with confirmed breakout and volume supporting the move in that direction. Okay, so as far as silver is concerned, you've got a good clear indication ahead of time that you were trending down, double top, downtrend. Here's a nice flagging position. Hawkeye congestion rules show that congestion period and volume also supports that. So everything's working together to help you to see and to find that alignment for you. Okay. Looking intraday, then it's much clearer. Yeah. When you look at it like a 60-minute chart, if you're looking at silver on a 60-minute time frame, you can see intraday price extension up into known supply or demand regions, sell off, volume showing that you've already entered into a short trend, a consolidation, boom. Here's your first break, pull back to retest, and you're back on the run. There's another breakdown, trend, consolidation, acceleration. End of trend run, buyers coming back in. This is not necessarily buyers. This is probably all the sellers covering themselves, taking profits, getting out of the trade because the trade is over. Now you have the accumulation phase. So this is going to accumulate until there's a continuation of the existing trend or a reversal. Okay. So intraday, longer term, it doesn't matter. Hawkeye's time frame is not dependent upon the rule set. So you can apply the rule to any of the time frame that you're looking at. You are very welcome. Yeah, NinjaTrader. Yeah, absolutely. Absolutely. TJ, when does the pre-market start? Pre-market starts anytime. It depends on the market. So, pre-market for the European session is going to be different from pre-market from the US session, which is different from the pre-market for the Asian session, and so forth. So, there's differences depending upon uh, the market that you're in and where you're trading at. So, it's all relative. It's just before that market opens. That's all I refer to. What is the green dot with a halo around it? What does that mean? Larry asked. Okay, those like this one right here, that's a little green dot with the halo around it. That is referred to as the 7-bar no progress indicator. Okay, what that means is that it's counting down. If after the 7th price bar, if you're not already in profit by that time, you need to consider whether to stay in that trade or to exit. Okay, so when you get into a trade, you want to be able to see it go immediately. If you get into a trade and it stalls on you, there's no reason to stay in the trade. You need to exit at that point. So the Hawkeye no progress indicator pops up and gives you a visual reminder that says, if at this point, by the time you enter the trade, if at this point you are not already in profit, you need to consider whether to exit that trade or to hold it. Okay? Look at the trade, look at the volume, consider it from a risk perspective. Then decide, okay, I've got too much risk in this trade. It's not going the way I want it to. I'm out. There's nothing wrong with that. That is a rule. If you follow that rule, if over time you prove that rule is a good rule, then it is a consistently uh, uh, profitable trade rule that you use in your trading. Okay. If you use it or not, it doesn't matter. Hawkeye just gives you the ability to apply any of these types of methodologies and tool sets to your trading so that you too can become consistent in application of your own rules. That's why Hawkeye is designed the way it is. Flexible, application, platform independent, time frame, or market independent. Okay, Larry, hope that answered your question. Let's see here. Okay, David mentioned has volume on MT4, but you're interested in the other indicators. Okay, so let me pull up an MT4 here for you. Okay, let me go just to the volume. Okay, here is the volume, just volume, looking at different triple time frames, where I'm looking at a 15-minute, a 30-minute, and a hourly chart on MetaTrader 4. If you'd like to have a much larger chart, you can always hit F11, clear out all the other stuff, but it's there as a nice convenience to be able to get to all your other indicators. But we're looking at the Australian dollar, Japanese yen. You can see the application of these charts. Let me pull that back in again. Where is that at? There it is. There's the leading edge right there. All right, so you're looking at the volume, but you need more than just volume to be able to make concise and definitive trade decisions. So that's why we use other tools, like the trend or the Fat Man to help us to make these trade decisions. If you're pulling this up, then you're looking for a trend dot aligned with momentum and volume to help you to enter and look at that trade. Here's another one right here where you've got alignment of trend, volume, and momentum in the direction of the trade to help you to make a trade decision. Once that's entered, okay, then you take that trade, you take your profit targets as they come, or just hold the trade while the Hawkeye automatic trailing stop holds you in, and then exit, boom, whenever the stop is violated or the trend direction changes. Okay, so that's simple application. So what this package does is it takes volume and it elevates it to something that's definitive. Now we have a definitive entry method. Trend, volume, and momentum working together to say this is where we enter, then the stop is violated, that's where we exit. This is part of the trend and stops package. Trend and stops module has the trend, the stops, the no progress indicator, all in a single package. It also includes the heat map, and it works together with volume. The Hawkeye standard package is the minimum package that you need in order to follow the three-step entry method. Okay, so it's a little more difficult to use volume to do that, but if you follow our three-step entry method, you will need to have the standard package to do that. So if you already have volume, then you can easily upgrade to that standard package. We give you full credit of what you've already purchased towards that. We'll be glad to do that. The standard package, the Hawkeye standard package. So let me see if I can show you that real quick. This is the members area you have access to. Let me open up another window here. Go back to Hawkeye. So if you go into the store, that would be the Hawkeye standard package. That's the base package that you need. It has all the entry and exit methods that you need. It also comes with the Hawkeye levels module, which includes the Hawkeye levels ATR, the Hawkeye Grabba, the trend module, which includes the trend and stops, the heat map, and the profit accelerator, which is the ads routine for the longer term traders. And of course, all the bonus indicators, the vertical line, the countdown, time between bars, in addition to the full volume module. If you already own the volume module, then we'll give you credit for what you paid for your volume module towards the standard package purchase. That way you'll get a direct upgrade into the standard package. That way you'll be able to follow the three-step entry method that we just showed you. Okay, good. Am I forex trading? Yeah, that's what we're looking at right now is forex. Absolutely. Let's see. What roadkill time frames on MetaTrader 4 do I use to trade a 4-hour time frame? Says Mike. Okay, that's a good question. So let me see if I can find this. Here we go. Right, here's a 1 hour. I can just set this up to be a 4-hour chart. So if I were to set this up as a 4-hour, okay, then you can see that I have a roadkill here. The roadkill is going to be looking at a specific time frame. I had it hard set to an hourly chart, but if you're looking at a 4-hour chart, it needs to be set up to look at a daily. So a 4-hour, the next one after a 4-hour is a daily. So you'd be wanting to set that up either as a D1, or the nice thing about roadkill is that you can set it up to be any integer multiple of the time frame that you're trading. So if you wanted to, you could make it look at an 8-hour chart. Okay, there's 3 8-hour charts in a day, so you're looking at a 3-bar interval, which is a good division. So an H4, you could also look at a capital I, use the Shift 8, which is a times, and then a number 2. That's going to take the base time frame, which is a 4-hour, and multiply it times 2. That will give you an 8-hour chart. That's a non-standard time frame, but it's not on an offline chart. So that way you can look at an 8-hour volume or an 8-hour trend or an 8-hour heat momentum and compare that to your 4-hour chart. Now you can't chart an 8-hour chart, but with Hawkeye, you can look at the volume, the momentum, or the trend contribution and still be able to make a definitive trade decision. Okay, so now I have an 8-hour volume and roadkill alignment looking at my 4-hour chart time frame. Very, very easy to set up. If you're not interested in looking at a chart that you can't see, then you'll need to set this up to look at just your daily. So you can set that up and look at a D1. Okay. Click OK. And now you're looking at a daily alignment relative to your 4-hour. Okay. I like to keep it as an I because then when I change the chart, it's always going to be looking at twice the time frame. I times 2. I don't have to come in and always change it if I change the time frame. So an I times 2, if I change this back to an M30, then 30 times 2 is 60. I'm looking at an hourly time frame. So now I've got volume from my hourly chart replicated here on my 30-minute chart. Okay, Mike, I hope that answered your question. Brooklyn, I'm interested in seeing your trade analysis on MetaTrader 4 for forex pound dollar. You're new, you just trade forex presently. Okay, let me look at that then. This is the euro. You want to look at the pound dollar. There we go, pound dollar, pound dollar, pound dollar. You didn't give me a time frame, so I'm going to be looking here at the 15, 30, 60 for now, since it's what I already have set up. Okay. Looking at alignment of the 15. Let me make sure that my roadkill is set up. My first time frame is 15 minute. My second time frame is a M30, and my third time frame is as an H1. Okay. So looking at the opening here of the European session, you can see that the initial opening was to the short direction. So alignment occurred right there. Here's your first entry point, but you can see that the third time frame volume was white. Now it was red previously and had gone neutral, so you can enter at this point with risk, but you need to wait until this point where all the volume and momentum aligns. But that gets you into a much lower point of entry, which is still a good point. You can see from this point here that you were able to go into profit, just not as good as the initial entry point. You would have had to have entered with risk at this point, but 25% relative to the full 100%. So looking at that as an analysis. Here you can see a break of the trend into a region that you already saw. Consolidation, trend break, consolidation, continuation of a trend, but volume would not let you get back into that because longer time frame volume was saying that this was still not a short candidate. So this looks like it was a potential head fake. Hawkeye kept you out of the trade. No trade. Long, no trade. Now you're still just waiting, okay? Right here, 1, 2, 3, that was your first initial entry for a long right there. Why? Trend, momentum, volume, first time frame. Second time frame, volume, momentum. Third time frame, volume. Okay, double dot confirmation. This is your first confirmation point that you can go long with respect to the longer time frame right there. Okay, so that's using 15, 30, and 60 minute for time setup and confirmation. Will it work scalping? Absolutely. If you're looking at scalping this 1 minute, 3 minute, whatever time frame you've got, a 1 minute, 5 minute, 15, you can trade those as well. 5 minute, 15, 30 minute. The idea is that you want to look at triple time frames to get in line with the longer term direction that the market's moving. Once that's in line, then you have to confirm that volume is behind the trade and that momentum is pushing it in the direction of the prevailing market. Once that's in line, you're good to go. You take your trade, you manage your risk, you exit when the market tells you to get out, either when volume says to exit or when your indicators tell you to exit. Great application of rule sets. There's no limit to the market that you want to trade. If you're just looking at forex only, this is a great place to go, a great place to start. Oh yes, Mike. The third time frame, yeah, H4, H8, and daily. If you're using the roadkill, then you can set it to an 8-hour setup, and then use your daily as your third time frame. That's exactly right. All right, another question. How does this all work on MT4 with just volume indicator? Okay, I think I went over that already. Sanjeev, if I did not cover that sufficiently, let me know. I'd be more than glad to cover that again. Just let me know. Is heat map equal to momentum? Yes, James. When I refer to momentum, I'm referring to the heat map. What the heat map is doing is it looks at all three of the trend speeds on your trend indicator. So if you were to go and format the trend indicator, okay, that's volume. Let me look at my indicators here. Look at the trend and stops. Okay, when you look at the trend and stops, you have a trend speed setting. Okay, trend speed, there are 3 different trend speeds available. Okay, conservative, normal, and aggressive. All 3 trend speeds. So you can go look at each one of these, and depending upon your risk tolerance, you set that up according to your own style. But it will cause the trend dots to change color either faster or slower based upon your preference. The momentum looks at all 3, the fast, normal, and slow. All 3 of the trend speeds. And when they're all in agreement, if they all say short, this becomes bright red. If any of them get out of agreement, say that the aggressive is no longer short, becomes neutral or starts looking long, but the normal and the conservative are both still short, then that's why this becomes dark. That means it's weakening in the overall momentum and direction of that trade. When it returns back to bright red, that means all 3 have come back into alignment. So yes, this is our momentum or our trend strength meter. We call it the heat map. That comes with the trend module, which is part of the standard package. What we're showing right here is the Hawkeye standard package, but we have the roadkill integrated with it. So this is, and we have some of the other bonus functions as well. So this is the standard package with the roadkill. All right, the roadkill is part of the professional package. If you're interested in purchasing it all by itself, let us know. Send us an email to support@hawkeyetraders.com, and we can add that to your standard package. Just let us know, and we'll give you the upgrade price for that. It's yeah, it's normally $550. The upgrade price, if you're a member, is $397. So you can add that to your existing package if you want to trade with that. But you have to at least have the standard package in order to use the roadkill, because the roadkill uses all the tools from the standard package in order to plot on the screen. James. Oh, wait a second. Hans. Hans has a question here. Is there a possibility that Hawkeye can produce for MT4 platform a template where predetermined settings, the same settings you show here, for example, and so on? There would be wonderful if we can get such a file. Oh, they should already be set up like that under the profile. So if you were to go under File, and if you look under Profiles, then you should be able to see, based upon the software, the package that you purchased, a list of profiles that are already pre-configured for these. Okay. Also, Each individual chart is going to have a template for it. So if you look at your template list, then you can see that there are quite a few Hawkeye templates already provided, which give you the base settings for all of the setups. Okay, so if I wanted to go and put up a new chart, okay, and I want to apply a template to that chart, okay, then you can see it already comes up in a specific setup and time frame. But now this time frame then, okay, will only be applicable if I save it as a profile. Okay? And so if I go to a different profile, and this is the same list of profiles that I have over there, then I can just go right back to a profile setting. Now this one is a volume profile setup where I'm looking at 15, 30, and 60 minute. If I change the time frames and save it, then next time I come back to this profile, it'll automatically be saved in that. Hawkeye Original, it's the same settings that you saw right there. So let me go back to this. This right here is a Hawkeye Original. It basically is trend, momentum, and volume with the volume radar, the volume paint bar, the pivots, and wide bars all applied to a single chart. That's all of the original indicators that come in the standard package. That's all that means. It's just a name. If you add the professional package, then yes, you get access to all the roadkill indicators. You also get access to the Fat Man. So if you've got longer time frames, you're looking at a Fat Man indicator, then the Fat Man is a part of the professional package as well, along with the roadkill. Now, the MT4 does not have all of the professional package, and so we refer to it as a total package. All the indicators that work currently on the MT4 platform. It does not have the gearbox, the gear changer, the KISS, or the Fat Boy. So there are some features. So we don't we sell it at a totally different price. So if you were to go over into the Traders Program section and look, you can see the professional package is listed for $19.97. But if you were to go to purchase it, then you can see the MT4 has a different name. It's called a MT4 Total Package. So if you were to go and look at purchasing the Total Package, it's all the tools that are exclusively made for MT4, but it does not include the gearbox, the Fat Boy, the KISS, or the tool set. And so it's at a much lower price than the professional package. Okay, so just to let you know. Linda says that oil is starting to move. It's always nice to know. Let's see if we got to see that. The beginner's package is the Hawkeye volume. As we call it, the starter package. The starter package is the volume module only. So if you look back at the MT4, I'll pull that right back up here for you. These are the 5 indicators that comprise our starter package, because you can apply volume to any market, to any other indicator set you are currently using. If you right now are trading with a specific methodology, you're following a MACD or moving average crossover, you've got timed input, you're trading on market profile, it doesn't matter. If you apply volume to the methodology you're currently trading, then there's the application of volume. So the starter package includes Hawkeye volume. That's the volume bars you can see on the first panel here. Hawkeye volume radar. Those are the red, blue, and yellow dots you see on volume that show significant volume events. You have the volume paint bar, which on the price bar, you can see the price bar are specific colors. Those colors are the same color as volume. So you can see the volume price interaction where that same volume color is on price. And you can also see the yellow dots are the pivots and the purple bars are the wide bar. So the application of the tools. You can see there, they're the pivot points. There are the purple wide bars. Okay, so you can see them on. Those are the 5 indicators that are part of the starter package. In the store, you can see the starter package is $360. I always give an extended special to anybody who is in our webinar today to give you the chance to purchase or to get started with Hawkeye at a greatly reduced price. So what I'm going to do for you now is give you a link for that. So if you, in your browser, if you type in HawkeyeTraders.com and you go through and type in WED for Wednesday, WED, Wednesday Trading Room, then that will take you to a special purchase page that will allow you to get the volume starter package, which is what I just showed you, the volume, the paint bar, the radar, the pivots, and the wide bar, all for $97. And depending upon the platform that you're trading on, click the button. If you're a MetaTrader, then click this button here. If you're Ninja, then click this button and allow you to purchase the starter package. Instead of not $360, it'll give you the $97 entry price. That way you can apply volume on your own in the markets to see whether this tool can help you in your trading. If you want to use the 3-step entry and exit method, then you need to be in the standard package at least. And if you purchase the starter, we give you full credit on that against the price of the standard package. It doesn't matter what type of bar you use. If you like candles, then you can apply that to candles as well. See, a candle bar doesn't matter. It's still going to paint the candle. You can also turn the indicator off if you don't like it on the candle bar. But it'll paint volume on top of whatever bar that you've chosen. Prashanth, I want to know if it can be used for trading NSE in India. Absolutely. Whatever data your platform displays, Hawkeye tools will work on that data set. So absolutely. David, on the trend and stops from MT4, did the stops part automate the stop process, assuming the trades are placed on MT4? It will not automate it unless you have an EA written using the tool. But no, it shows you the location. Okay. So if you're in the trade, okay, and you're following this automatic stop, if the price comes up and hits that, you have to exit the trade manually. Otherwise, if you write an EA, that will automatically exit for you, or if you have an automatic trailing stop, which you put into your stop rules, then it will automatically exit following this tool. But otherwise, you would have to exit manually unless the EA is specifically written for it. Yes, you can use wrinkle bars, TJ, absolutely. Tick charts, tick bars. If you have it available, then the Hawkeye volume trend will work with that. Absolutely. Why are some volume spikes colored white? Yeah, white is no demand. That's right. Some of the volume spikes, if they are white, are showing you that the distribution of volume on that price bar is equal. That means there's just as many buyers as there are sellers. So if you were to look at the distribution, a lot of times you look at a distribution like a bell curve. And if you plot it sideways, then it looks like a nice, even, round, well-distributed bell. Most of the white bars are going to be just like that. They are even, round. There's no real clear demand of price in any one direction. A green bar, there will be a nice skew of volume weighted toward buying activity. And if it's red, there will be a nice skew of volume weighted towards selling activity. And that's the differences between those. And that's why sometimes you'll see white. A big white bar, yes, there's no demand, but that's just showing there's no clear demand from buyers, no clear demand from sellers. It's just they're battling each other as a real even distribution. Now, if you can see a huge spike like this after a clear period of selling, then that also is telling you that, okay, There's a lot of activity coming on here, big battle going on, but then there's a clear change of momentum in the direction of volume. Okay, that's all that's saying. Damn, is it licensed for demo MT4 platform? I already own it, but only works on live account. It can work on demo or live account, does not matter. It will work on your platform regardless of whether it's a demo or a live account. Mike, you asked, how do you set up Renko chart for scalping a 3, 6, and 9 minute? You don't, because Renko is not a time chart. Renko is just a modified tick chart. So you have to set up a Renko chart separately, but you still apply the same charts, your first and second and third time frame. So you can set up 3 different Renko charts and you apply the same rule set, but just using different Renko time frames. Time being a relative use of the word. That's right, it's the equivalent setup. What is the rationale for selecting the different time frames? I'm asking this since I used trading the NSE where the volumes are very different. Yeah, they are going to be different. Each market will have different volume in it. But the rationale is that you want to trade a time frame that's representative or gives you clear indication of trends for that market. All right, a 1 minute time frame is just going to look noisy no matter what market you're in, unless you're looking at a huge volume and a nice trending market. But look at the charts, look at the time frames. If you see noise, try a different time frame. Try to go either longer or shorter time frame. The longer time frame will always smooth out noise and will always give you much nicer charts. So you have to decide the time frame that you're willing to take into trade and to see whether the market volume and volatility of that market is a good fit for that time frame. It's not a you only use this time. If it were that simple, everybody would be doing it, but it's not. You need to be a little smart and you need to apply a little bit of work and axle grease to your trading, elbow grease. You need to sit down and do a little bit of work on your own and find a time frame that looks good, especially if you're trading off markets like the NSE. Then you find a time frame that fits with your market. Then you apply the Hawkeye tools, which will completely adapt to whatever time frame you choose, and then apply it to that market. Some of the indicators are forex only. That's true, but you can apply like the tools you see on the screen right now: the trend, the stops, the momentum, heat map, volume, roadkill. These are applicable to any market, even though it's on Forex. But some of the other tools, like we saw on the roadkill and the Fat Man, this Fat Man is a Forex only tool. So it will only be used on the Forex market. Now, if we were to look over at one of the other markets, you can see that the KISS, the Fat Boy, now those are tools that are only used in futures or equity markets. Okay. So they're not really applicable to a Forex market. So we have some tools that are designed specifically for Forex and some tools are designed specifically for either futures or equity markets. So the tools are, some tools are specific. And that's why we break it down based upon standard package, which is good for any market, or the professional package, which gives you the flexibility to trade any of the markets. And it gives all the tools and the trade setups in order for you to do that. Absolutely. We do not write any of the EAs. All of the tools can be used and modified and run. So in NinjaTrader, for example, you can write a Ninja script and an automated strategy using the Hawkeye rules and the Hawkeye software in order to apply to your automated trading. So yes, you can develop automated rule sets for MetaTrader 4 or NinjaTrader or TradeStation. So all the tools are applicable, and we do have function calls available that enable you to write your own code, but we do not write the code ourselves. I can refer you to a programmer who will be more than glad to write your rule set into a automated software, but we're not going to be putting that out ourselves. Yes, Chris, if you send us an email to support@hawkeyetraders.com, ask us your question, then we will give you a satisfactory answer. Absolutely. You're welcome. So if you need to find that out, then if you go over to contact us and you click on that, then you can either fill out this form or just email us directly, support@hawkeyetraders.com. And we'll be more than glad to get back to you and give you the information that you're requesting. Why are the zones not included in the professional package? Because the zones are a third-party add-on product. What we've done is we've taken an already existing product, which was the APA zones. Gabriel Brent is a very good friend of mine. And what we've done is we've integrated those into Hawkeye, and we call them the Hawkeye zones. So we basically have modified and relabeled it such that it now is branded as a Hawkeye tool, because we saw how well it works together with our tool set that we licensed it and are reselling it as Hawkeye zones. So because it's third party, we didn't write the code for it, develop it ourselves. We sell it separately as an add-on to the existing core products that we exclusively have all the copyright for. So that is why. So David asks, is the Fat Man only applicable for longer time frame forex trading? No, not at all. The Fat Man can be applied to any time frame markets. Like right here, this is an M30 chart. There's a rule of thumb that we use for trading the Fat Man. Okay, the Fat Man is always going to be 3 times the time frame if the time frame is less than 60 minutes. So a 30-minute, 2 times that would be a 60-minute, 3 times that it's a 90-minute. In MT4, you don't have 90 minutes, so you have to use an H1. Other time frames, you can put a 90-minute if you want to. If you're trading a 15-minute chart, 3 times 15 is 45. Let me pull up another chart here. There we go. See, here's a 15-minute, so I have a 45-minute chart, but I don't have a 45-minute Fat Man on MT4. Okay, so from that, I have to use a 30-minute and an H1, an hourly. That will give me an approximation. I can see that the hourly pound has not become overbought yet, but I can see that the 30-minute pound has already entered into an overbought region. So a 45 will be just about entering it. Okay, so that would be a good approximation for that. If I would pull up NinjaTrader, then I can pull up a 45-minute Fat Man. And here you can see I have a 45-minute Fat Man compared to a 30-minute or a 60-minute. So you can see a 45-minute approximation of the same chart, but this is on a different market using a NinjaTrader. If it's 60 minutes or greater, then you set your Fat Man to 2 times the time frame. So if I'm trading a 60-minute chart, 60 times 2 is 120. I'll use a 120-minute Fat Man. If it's daily or greater, then you use an equal Fat Man. So a daily chart will use a daily Fat Man. A 1-minute chart will use a 3-minute Fat Man. If you don't have a 3-minute, use a 5-minute. Use the closest Fat Man to the time frame you have available. How is it different from better volume? I'm not sure. I have not looked at the better volume, but I think most of the volume that is available, I refer to those as dumb volume, simply because they're not looking at the volume spread analysis. Hawkeye is focused on volume. We've integrated the volume spread into the volume indicator to show you the overall distribution of volume on any specific price bar. Okay. And so we look at that distribution and then we couple that with price. We look at the open, high, low, and close of every price bar and integrate that with the distribution to give you a volume price analysis rendition of volume. So no, we're not just looking at if the close is greater than the open, paint the bar green. If the close is less than the open, paint the bar red. That's what I call dumb volume. You're not going to see a white volume bar. So you're going to be, this is the volume spread analysis coupled with price. And so you're looking at a very, very intelligent and smart bar that's looking at the institutional buying versus the retail buyers, and you're looking at seeing whether you've got big players or not coming into this price bar. That's the application. Absolutely. All right, now I'm going to go ahead and stop this recording now.